Hello and welcome to our look at the upcoming Wednesday, August 27th trading session. In front of you, I have the economic calendar open, and it is relatively light as far as importance. There are several announcements, but really only a couple that we think could move the markets in and of themselves. We are paying attention to the German consumer confidence climate numbers. It's anticipated to come out at 9 even, and the reason this matters is because, quite frankly, the euro itself has been so sold off. If we get more bad news, especially out of Germany, that's only going to continue to put pressure on the euro, and at this point in time, really any rally, even if we get a rally based upon this number, will more than likely invite selling. The next number that we're looking at, it is a localized number for a specific market. It is a crude oil inventories number. Quite frankly, this is the type of thing where the oil market's got a little bit of a rally during the day on Tuesday, and a strong withdrawal number could send the markets higher. But right now, it's not until we get above the 94.5 level, and I'll show you this on the chart here in a minute, that we would even consider buying. A rally at this point in time that doesn't break above there is probably going to invite selling, at least for the short term, as we continue to consolidate below 92.5 and WTI truly falls apart. Looking at the aforementioned WTI charts here in the oil, you can see that we did rally, but we ended up failing a bit. Go ahead and move this line here to about 95 or 94.5. You can see there's a little bit of gap there, and that's really what I'm looking to see broken to the upside. The fact that we did this tells me that any rally on the short-term charts will probably find sellers below 92.5. We will head to the 90 level, which is much more supportive on the longer-term charts. Above 94.50, then things change rapidly, but unless we get some type of blowout number, probably not going to happen. Looking at the euro dollar, you can see this is a market that simply cannot get out of its own way. 133 is significant resistance above, so even if the German numbers come out fairly strong for the day, any short-term rally is just begging you to sell it. This market is trying to find more significant support. It does not have it right now until you get to 130, and quite frankly, I think it's 128 before you see any real longer-term support. There's probably going to be a bit of a bounce at 130, but that will be temporary. Any bounce from there, I'll be looking to sell on resistive candles, just as a bounce from the economic announcement coming out of Germany. A break at the bottom of the range is reason to add to an already short position. And looking at the S&P 500, you can see that 2000 did offer resistance after all. The 2005 level was touched, and we sold off a little bit to form a shooting star. This is a classic sell signal in and of itself, but really there's no need to do that here. Just simply wait to see where we get our support, maybe 10 points lower, and a supportive candle gets you an opportunity to buy on the cheap, as it were. On the other hand, if you break the top of the shooting star, that's a very positive sign as well. We have no interest whatsoever in selling the S&P 500, and we'll look for pullbacks as potential value, as the market should go much higher. This is a strong market, it's in a strong uptrend. There's no reason whatsoever to fight a market that's doing this. It needs to rest, we get that, but quite frankly, trying to pick out a shorting opportunity and reversing your position before the market goes against you, very dangerous to do. And with that, I've looked at the August 27th trading session.